Good evening, everyone. Welcome to another session on dollar INR. There has been decent volatility this week, and a lot of people has been asking me what to do in managing their risk. So I wanted to share two charts to you today. Okay, this is the dollar INR onshore chart. Okay, the onshore chart. So you will have a lot of gaps. Onshore chart from 9 a.m. to 3:30 p.m. Okay, I wanted to show you certain interesting things that has happened. Okay, so let me first zoom in this a bit. So let us get closer to the prices and then you will have a better idea. Okay. Now, if you look at this chart, what has happened in the last 1 week or so, we had a gap here which was around 86.75 and we had another gap here around 87. Interestingly, this gap closed this week. Earlier part of the week we saw rupee gaining, and then suddenly yesterday and today we have seen that rupee has weakened again. So this week we saw this gap getting closed, this particular region. Okay, so that goes on to substantiate the argument that gaps in dollar INR usually fills up. Okay, usually closes up. So remember this outstanding gap of 86.75. So probably we might get a move towards 86.75, but this gap has been closed. So multiple conclusions here. Let me show you the other chart, then I will try and get you the conclusion on dollar INR. Now this is the 24-hour offshore chart. Okay, so it is from morning till evening and it runs 24 hours, but this is a weekly chart. The earlier one that I showed, this was a daily chart. This is a weekly chart. Look at the formations that have happened here. Okay, the formations that have happened here. Sorry, let me just get my pen. The formations that have happened here. Okay, now particularly look at this particular candle, the candle of this week. The prices opened at a level, it substantially went down. Okay, look at this long lower shadow, it substantially came down and then it has gone up again and closed at this level. Okay, so that is what we call as a long legged doji. Why do we call it a doji? Because the open price and the close price of the week is very close to each other or almost similar to each other. Now also look at this portion, the candles of the last 3 weeks. All these candles had long upper shadows. Upper shadows means that there has been a decent amount of selling from the high prices of the week and it has come lower. So we have already established that this is a resistance zone. Okay, the previous peaks have been here. So you can see this is the previous peak, this is another peak. So these are all resistance zones. So on the resistance zones, these kind of candlestick patterns being formed is some kind of an indication that we are closer to the top and there can be a counter reactive movement below. And that also substantiates with our argument that this gap is an unfilled gap, and looking at the ability of dollar INR to fill the gaps, there might be a movement slightly downside, which means a slightly stronger rupee, at least till the levels of 86.75. Okay, so what does it mean for exporters and importers? See, the levels are very high. We have seen the weekly chart here. The levels are very high. 87.50 levels and above are really attractive levels for exporters to sell. You get 1.5-2% forward premium as well, and I'm sure your budget levels are much lower. So these are recently decently good levels to hedge for your dollar exports. So you should look to hedge as much as you can and reach to a reasonably comfortable hedge ratios. Okay, now for importers, you can wait for this counter reactive move. See, we saw this move till here. You can look at another move at least towards 86.75. So that level is the level where you should look to hedge your liabilities. The first support is obviously the level that we saw this week, the levels around 86.90 to 87. So that is the first level of support. So you should hedge some portions there and you should hedge a slightly larger portion at around 86.75. Okay, you can look at doing both forwards as well as vanilla options. but at high levels at around 87, 50, 60 or 40, these levels are not really great levels for importers to do forwards. So in this situation, if you are mandated to hedge, it is better to hedge using vanilla options. Okay, so that is it from my side on dollar INR. To get more such insights on markets, on currency markets, please scan this QR code and join our WhatsApp community.